Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 18th of July. Turkey coup attempt fails. The Turkish authorities thwarted a coup attempt that began on Friday night and developed into turmoil and violence. The Turkish lira collapsed while the safe havens, the yen and the gold, surged on the news as the coup attempt spooked investors and urged demand for safety. As the markets opened on Monday, though, the Turkish lira recovered some of Friday's losses, and the safe haven assets reversed their gains as investors' risk aversion eased. We believe that the political uncertainty and the geopolitical risks are likely to continue to weigh on the Turkish lira despite today's relief bounce. The political risks are likely to have negative implications on the economy and could push once again dollar TRY above the psychological level of 3 in the not too distant future. Overnight, New Zealand's CPI rate rose to 0.4% quarter over quarter from 0.2% previously, but missed expectations of 0.5%. The New Zealand dollar was already under selling pressure after the RBNZ announced last week that it will issue an unscheduled economic outlook update on Thursday and continue to decline following the below estimates CPI. Although inflation accelerated on a quarterly basis, this was the result of higher energy prices. What's more, the year-over-year rate stayed at 0.4%, making us believe that the underlying trend of prices will only move gradually towards the 1 to 3% target range, something that could force the RBNZ back into action. Alongside a potential rate cut, officials may choose to introduce macroprudential measures aimed at curbing New Zealand's housing prices. As such, Kiwi could remain under selling interest at least until Thursday, when we will receive the bank's updated economic forecasts. As for today, we have a relatively light calendar with not much on the agenda. The only noteworthy economic release we have is the US NAHB housing index for July, which is expected to remain unchanged from the previous month. As for the rest of the week, on Tuesday, the Reserve Bank of Australia will release the minutes from its July policy meeting, where officials remained on hold. Interestingly, the bank did not signal imminent easing and changed its statement language to indicate that new information will allow the board to determine whether more action is appropriate. An account of a board even more dovish than the statement suggested could raise the likelihood for near-term action by the bank. From Germany, we get the ZEW survey for July. From the UK, the CPI for June is due out. Then on Wednesday, we get the nation's employment report for May, and on Thursday, retail sales for June are coming out. Given that these data are largely collected prior to the Brexit referendum, we expect them to attract less attention than usual unless we have significant surprises. On Thursday, the European Central Bank will meet to decide on the course of its monetary policy. With no forecast available, we expect the bank to remain on hold despite the outcome of the Brexit referendum. Immediately after the vote results, the ECB said that it stands ready to add further liquidity into its market, but shortly after, officials appeared more hesitant with regards to near-term easing, perhaps due to the calmer than expected market reaction. ECB Vice President Vitor Constantiou said recently that the bank has to wait a little bit to see how Brexit is going to affect the Eurozone before assessing whether further stimulus is needed. Furthermore, the fact that the bank's TLTRO2 operations and the corporate bonds buying program were implemented in June, enhancing the case for officials to be patient for now. Finally, on Friday, market has announced that for the first and only time, it will release the preliminary versions of the UK's manufacturing and services PMIs for July. This is done in order to give Bank of England policymakers and investors an early assessment of the referendum's immediate economic impact. From the euro area, we get July's preliminary manufacturing and service sector PMI data from several European countries and the Eurozone as a whole. Most of these indices are forecast to have declined. From Canada, we get the CPI for June. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.